Good morning, good morning, good morning, everybody. It is Thursday, November the 9th. I think it's the anniversary of when Trump won, but I don't remember. Anyway, here we go into the could be possibly the ninth consecutive green close on the S&P 500, the SPX and the SPY. Little thing to show you on QQQ in a minute. But for those that are doing spreads, which is the best way to be playing this, this is your trade for today for the red close, as we have had the last 2 days, both of which had to be closed. The trade had to be closed, but both of them produced 100%. 100%. $2 risk, $2 credit. 43.90, 43.85. Buy the 43.90 calls, sell the 43.85 calls. They are collecting at the moment, for those of you with interactive brokers that can trade pre-market, greater than $2.50. Bring you on as to the why. Again, 8 green closes in a row. Somebody asked me yesterday before the open, so what's your win percentage on the safe edges? I said 100%. He says, it's impossible. I said, it's 100%. He says, why don't you answer the question properly? I'm asking you a question. Why are you giving me cryptic answers? I said, it's 100 fucking percent. Doesn't mean it's a trade you want to take. Yesterday, shared it. 20 cents credit. 20 cents. That's all you could get on the safe edge. 44.20, 44.30, 44.25s. But fucking thing was zero fucking 30 minutes into the day. Safe edges, they work. Risk plays is where you get a little bit of money. And risk plays, you can get your 25, your 50 cents out of the risk plays. The risk plays, those only have a win percentage rate of around 90, 92%. Haven't done the full calculation, but it is greater than 90% because I have calculated that. 43.80, 43.75. 2 days ago, you had to time that bitch perfectly. 3 minutes, 4 minutes, 5 minutes before the close when we got the dip. Boom. You got 100% on your money. Yesterday, I promised you 43.60. It's in your video. It's in your chart or your chat. I believe it might even be in the email. I don't remember. I'm getting old. We dropped right down to 43.60. 100%. $3 credit. Got out at $1 and less. Today, I haven't made a decision yet on I can't make a decision on the safe spread because it's not out there yet. But this is the risk trade, 43.90, 43.85. And I want everybody to be aware it came out right at the close yesterday. SPY, fake print, 439.88. We give a lot of respect to fake prints. Not all of them work out. There's a SPY print that's way up at like 460 something. Didn't work out. We got a fake print yesterday. My opinion, we are going to see that fake print, but we're not going to see it now. We're going to see it in a week, maybe even the week of Thanksgiving, but not right now. So I will bring you on quickly as to, again, 8 green closes in a row. Range is getting smaller and smaller and smaller and smaller. We actually, boom, 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 I had it wrong there because that was the secret I was going to bring over there on the QQQ. We closed below the open for the first time during this consecutive run streak. We did the same thing over there on QQQ. Closed below the open. I forget the spread I threw out there, 375, 374 on the QQQ. They were getting 30, 35 cents, zero. No plus 1%, no minus 1% yesterday. Open, close, all in the 370s. Imad, that was really nice talking with you yesterday. And funny enough, man, 43.60 on the SPX came while we were on the phone, and you closed out that QQQ trade that you were in, and you made, what, 100, 150% on it? So retracements have moved up because we have fractionally pennies higher yesterday than the day before. We're up 9.18%, 31 points over on the QQQ. On the SPX, we are up exactly 7%. It might be 7.00001, so don't count me at 7% exactly. 287 point bounce, 193 point November. Range is getting smaller. Range is getting smaller. Today, you can treat today like the FOMC meeting if you want to. Speakers that fucking, you're better off farting in the forest. There's absolutely fuck all getting done. They are literally coming out and saying with big megaphones, we are not cutting rates. We are not even considering cutting rates. Market doesn't give a shit because that's what we rallied off of on Thursday and Friday of last week. Now we're creating problems. Today, 2 o'clock, Jerome Powell speaks. I have no idea what the event is. I have no idea whether or not there is a scripted text prior to him speaking. I have no idea or not if it's going to be like yesterday where he's not going to say anything. He's got no comment. But that's what we got. So come on over into where we are. Futures are up 9 points on the S&P, 7 points on the NQ. I want you to take that into consideration. The 15,400 NASDAQ is up 6.7 points, while the 4,400 S&P is up 8.9 points. Your weakness is starting to show over there on the QQQ. It's not as weak as the red-headed stepchild Russell 2000, but it is starting to be weak. But more importantly, you need to see these white lines. White lines, go away. Yeah, the white lines are your 5-day moving averages. The white, God, I got that song White Lines in my head now. God, I remember that as a kid. I love that song. Didn't know it was about Coke. So white lines. These are your 5-day moving averages, and these are, like it or not, the lows of the day today again. Because when you're in this algorithm where you are trolling in an upward movement, fractionally moving at all, your 5-day moving average is your bottom. It is your bottom. You are fooling yourself and you don't believe it if you think that you're going to break that 5-day moving average and go down. Google, YouTube, don't fucking copyright infringe me because I'm not playing music. So that's your futures. That's your futures. And now we will get off of this and come on to show you what we're talking about. And this is especially for you, JD. All right. This is your 1 hour SPX. This is your move off of the 400-day moving average, which we hit on our lows less than 2 weeks ago. We peaked over here Friday last week on the 1 hour. Okay. And what you can see here is this running sell divergence on the 1 hour RSI. Okay. It's a running sell divergence. Now, the bad news about these is because we have been going flat for so many days, as you can see, your 1 hour RSI is already in the lower 60s. Move this, and let's just draw another one. A 20, 30-point dip, like yesterday's 30-point dip, it would take nothing to get this thing into oversold. So again, we are in that unfortunate stuck, and we are not going to get that heavy drop. 5-day moving average was 43.60. Today it will be fractionally higher than that, probably around 43.65. Here on the 4 hour, okay, same thing. We peaked here on Friday, and we now have ourselves a sell divergence on the 4 hour as price has moved up during the course of this week. Sell divergences are sell divergences until they aren't. And more importantly, overbought can stay overbought for days. I can show you the NASDAQ. It is overbought since the middle of last week. It's overbought. And we're not getting any movement out of it. You get oversold, and you are going to bounce within an hour. So that's where we are. This is looking at a 4 hour. Let's look at a 12 hour. bigger time frame, much wider time frame, much bigger move on a 12-hour. 1 hours, more indicative of what we can trade, what we can flip, what we can zero DTE. 12 hours, more indicative of what we can go a couple of weeks out, maybe even a month out. Same thing. Sell divergence on the 1 hour or on the 12-hour, not doing anything as of yet. As we peaked here, okay, peaked right here 1 week before we topped. As we peaked here, days before that June top, before we had our little dip. Big, wider time frame. So, since again, we don't have anything to discuss, we'll go on to the daily. The daily overbought over here in June. Lower high as we went into that July top. Sell divergence in your face. One of the reasons why we were short. Big oversold on each one of these big bottoms that we got. Buy divergence on the one in September. That was, again, why we knew that we would be going up in October. As we came down here just recently, again, on that full moon weekend, 2 weeks ago tomorrow, again, oversold big time, and why we were getting long. Now, the move that we've got has taken us, like I've said, way past where the short-term move should have been. We've actually completed the entire month in a week and a half. The whole month of November on the upside move is done. It's completed. But now we need to see, where do we dip? So again, come over here onto the week to date. This is the Monday to Wednesday chart. 43, 47, 43, 91. Do the math. You are in an exceptionally tight zone. Exceptionally tight. Yesterday, perfectly. 43.60. There you go. Enjoy your day. Closed green. Closed green by, what was it? 4 points. Just to go and close green. And again, look over at your red-headed stepchild, Russell 2000, red 3 days in a row. And not just red, glaring red. So again, here we are. What we need to respect, because it is there, so we're going to give it the respect that it needs, is this gap from September 20th is unfilled up to 44.02. 44.02 with, you know what? We'll go ahead and throw it up here. Why not? Because we ain't got shit else to do. Let's get rid of these ones that we don't need, which is the 200, the 20, and even the 10 we don't need because they're so far away. Again, as you see here, a big boop boop came right down to the 5-day moving average and said, fuck this job, fuck you all. I'm bouncing and closing green. 43, 83, 72. 100% above the COVID lows. So you got your gap up here, 44.0220 from September the 20th. Right at the top of it, which will be moving down fractionally today by a couple of pennies, is the 100-day moving average. We are above every single moving average that is out there. So I'll bring you back into it again. Let me load it in here. Okay, so here we go. Here's the 5-day moving average. Here's the 50-day moving average. Way down here is the 20-day moving average. And way down here is the 10-day moving average. When all of these moving averages start moving up, which is going to take days because the 20 days factored over 20 days. It's only been 8 days since we were at the bottom at 41.03. The 10-day start moving up. 50-day moving average isn't going to be moving up because that's a wide time frame and will be moving fractionally lower because of the movement that we made. When the 10, the 20, and the 5 are all converging in this same little zone right around 43.40, 43.50, that's when it's the easiest for the algorithm to go and break down and then start moving downwards. So that's going to take at least another week, 2 weeks. Dip, yes, we're going to get a dip. Complete fullback reversal, again, doesn't fit into the time frame and shouldn't be happening anytime soon. So here, QQQ, leave you here with this. This is the weekly, okay? Weekly. You topped in June. If we are going to go and produce a top up there again in the 380s, which are 8 points away, you are going to have the most remarkable sell divergence on your weekly time frame that is going to scream and holler at you as if you dropped a bar of soap in the fucking jail prison cell. So get ready. Daily. Bink, 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 bink. Thank you, Thinkorswim, for taking so fucking long to load up. Anyway, the daily is already up here at 80 on the RSI. We're not screaming 90, but we're up there. Again, over here, the daily worked out perfectly to get overbought right when we put in the highs over there in July. Oversold, perfect bounces, and right now we are exceptionally, here's your 1, here's your 2, coming off the lows in the beginning of the year, which is the same as the lows back in October. Your 1, 2, your big 3, almost hitting the 200 extension. Nice little retracement on the 4, never came to 50 retracement down. And here we are plateauing right in this resistance area of 372, 373. 4 hour. This one will really kind of enlighten you a little bit as to what we're talking about, since we are wasting sunshine. QQQ is not the NDX because the QQQ is open a lot longer than the NDX. NDX is only open from the opening bell to the close. Look at this RSI over here on your 4 hour and look at your fucking move. All right, here, we'll take this off 90 days so you can just zoom in. Here is, right, starting here. So, okay, ooh, gotta be correct. Right there. That's when you could call it. We've had this running sell divergence on the 4 hour for the better part of 3 days. And all we're doing is floating like a bunch of Cubans trying to get over to Miami. 366, 365 are your bottom. Come in wider and get off of that. 5-day, 15-minute, and we'll get rid of those studies. Load study set, 50-day. Here we go. 10-day moving average, 20-day moving average, way too far down. 50-day moving average, perfect catch. If we can get a breakdown here below where we're at, get rid of this, trying to show you that. 372, 372, 373, 373, right there. We can get a breakdown below that, break that 5-day moving average, which is going to be moving up higher, test this 366. As you can see here, 368, that's been your point of control. You've not gotten below that 367.84. We can get a push down into that 366, 365, be a perfect catch for the 50-day moving average. And then in a week and a half, when NVIDIA reports they can save the world with their Ponzi scheme bullshit, talking about how AI is going to fucking do whatever, man. So, yeah, today, that's your trade. Got a fake print on SPY, got to be careful for it. This is your credit spread if you're going to play it and get that same play that continues to pay and play. The futures are overbought, and 2 o'clock, we got Jerome Powell. Coming at you here is Wheeler Walker.